up, everybody? Welcome aboard to Trading with Bubba for Thursday, the 28th of December. And of course, as we've been beating the drum over the last couple of weeks about there's really not much going on. It is the holidays, it's quiet. And as we take a look at some charts, once again, if you're going to trade, my recommendations are to sell credit. We are up against the upper ends. We are still extremely overbought on these markets. It does not mean they have to go down, nor do we really expect a big sell-off. I just don't expect a major rally the last couple of days. Now, of course, anything goes the next day or two, with tomorrow being the last trading of the year. But if we look at the SPY, once again, we're up against resistance. We just go through the stocks we kind of watch together. As you notice, Apple reached the top and is now coming down towards the bottom. Apple, if it gets down to about 190, look to sell some put spreads. Again, we're looking to play these ranges as they trade. Amazon, again, holding up against the top, look to sell some call spreads. And again, these are stuff you can do all for tomorrow. These could almost be like zero DTE type trades. That is up to you. My real recommendation is you do nothing and take the day off. Take the next 2 days off. But if you need to trade or you feel compelled, these are some ideas that you can use. Coin continues to be in a blow-off formation, but once again, been overbought, and basically the stock has gone up in less than a month, and just over a month, it is basically doubled. Now, we know that that is not reality. That is not going to be able to continue. This is one I would look at potentially taking a short position in. But again, it's hard for me to make any real recommendations going into what is going to be probably the slowest day of the year, unless there happens to come some bad news, some selling information. But overall, I don't expect that. I expect these markets to continue to grind higher. There's nothing in the news that says that there's going to be a change. So, but I would be looking for a short position in coin just as a short-term trade. And again, it would have to have a trade that I had my risk determined before I put the trade on. Meta, you can see up against resistance. Would like to sell call spreads. Google, up against resistance, like to sell call spreads. GLD, up against resistance. So you're seeing that the common theme here is everything is overbought. Now, again, it doesn't mean it can't be overbought longer. There is no time limit, just like there's no time limit on a market consolidation. There's no time limit on how far a market can go down. There's no limit on how far it can go up. And remember, if you're trying to take a short position, other than selling premium in these markets, remember this, okay? It's a lot harder to pick the top than it is to pick a bottom, because at the top, markets can keep going and who knows when they stop. IWM, same thing, up against resistance, breaking out of a little bit of a level here, looking for some new possible resistance areas, okay? Microsoft, right up at the upper, look at it, failed right from the upper top. Again, selling call spreads. Nugget, up against the top, look to sell some call spreads. NVIDIA, kind of in the middle of nowhere, not really, kind of in a range, not really tradable at these levels. It could either go back up towards the top or come right down back towards the mean. The Qs continue to push higher again. Look to sell some of the zero DTEs. Square, well overbought, continues to be there. Look to sell some credit. The SPYs, same thing. Look to sell some credit. Tesla, same thing. We're seeing a consistent pattern here, right? Okay. Win in really no man's land to trade for what we're looking to do now. XBI, look at this move again. We'd look to be taking a position of being short, but we want to be short through credit, which gives us a limited amount of risk and a limited amount of reward, but it can put you in. But again, I will say this again to you. My recommendation is you take the day off and not trade. But again, if you feel compelled that you have to trade, look at Zoom right up at resistance. So you're seeing the consistent patterns throughout everything. And we're seeing a market that is dramatically overbought. But remember, it could remain overbought. And if I were going to script to you what I was looking to see, I think we stay higher the next 2 days. Remember, it's a long holiday weekend. I would expect to see a big rally, and if I could script it, I would like to see the markets rally into next Friday or Monday, so either the 5th or the 8th, on heavy volume, creating a blow off top, in which then I would be willing to take an actual short position, okay, not just selling credit. Now, I think one of the things we want to remember is selling credit is always something that we can do, okay? That is something you can do every day of the year, whether you're be selling call spreads or put spreads, and that is when you're using what we call the phases of the market. So when you're in consolidation, either at the top end of the level or the bottom end, you sell call spreads at the top, you sell put spreads at the bottom. Okay, again, you're playing the range, you're playing the consolidation pattern. And if you learn that, it's just a way to grind out, to give you added ammunition, added bullets to trade with, and to keep you busy. Because one of the things that people have trouble with in markets is they get too anxious to create a position looking for the big score, when what you really should be looking for is the consistent grind them out type of markets. And of course, if we look into the futures markets, look at the euro currency, which is against the dollar, again, going straight up. Okay. Bitcoin up against consolidation. This looks like a great spot to potentially sell some credit or some call spreads. And of course, you can use BITO or any of the other ETFs like that. Bond markets very much overbought. Notes very much overbought. Again, the whole world, the whole market structure seems to be preparing for a rate cut. Now, it's hard to imagine that the Fed could actually cut rates, although they're talking about it. But it's hard to imagine when inflation hasn't gone away. Even though they're trying to make the case for inflation being negative in November, which we all know is BS. But be prepared, okay, to look at these charts. Look at the gold market. Overbought, looking like it's starting to fail right in here. Platinum, which we don't trade, but look at this, straight up. So what would you expect from platinum? Well, I expect a little bit of a pullback. I mean, we were buying platinum at 900 on our Monday night call. Okay, so that's something, again, to be watching. And again, remember that all charts are the same. It doesn't matter. They're all going to react similarly off of those patterns. Okay, copper up against resistance. Silver in the middle of nowhere, actually more towards the mean. So if I were looking at silver, I might look at a potential, selling some put spreads down here up against the mean. The grain markets, yeah, it doesn't matter. All markets are going to turn the same. Corn turning around the center of the mean. Soybeans turning at the mean. Wheat turning around the mean. Again, natural gas turning below the mean, looking to potentially be a candidate to sell some put spreads or something of that nature. Again, the positions you want to be using today, okay, in the next couple of days, have to be very restrictive as to the amount of risk that you're going to take. You do not want to put yourself in big jeopardy here, because you're not going to have a busy market to trade into. Crude oil, okay, or again, hovering around the mean, not much to do. So you're seeing the consistency of where we are. The futures continue to go higher, pushing up against those resistance levels. So again, I repeat just not to be too redundant, but I will be. There's not a lot to do here. Okay, so you remember the lack of activity, lack of opportunity. So lower VIX means that lower premiums. So remember, you're not getting anything for nothing. You're going to have to either sell closer to the sun and take a little bit of risk to get enough credit, or if you're going to sell away from the at the money stuff, then you're not going to get very much credit. So do you really think it's worth the risk that you have to take? And I think these are important questions that you as a trader have to ask yourself when you look at a chart and say, how much can I make? Is it worth the risk? Is it worth my exposure? And often it is not. Okay. Often you are better off sometimes sitting it out, because remember, there's going to be plenty of opportunities to trade. Okay. And this overbought condition is going to resolve itself at some point, whether it be tomorrow, next week, next 2 weeks, we don't know. But when it resolves, we'll be ready for it. And the best part about it, if you're listening and using some of the knowledge I'm sharing with you, if you don't put yourself at high risk and blow your dough now, you'll have ammo to fire into a market. Remember, as a trader, as a short-term trader or a swing trader, your biggest asset is your inventory, which is your cash. So if you blow your cash when there's really nothing to do, then what are you doing? You're putting yourself in jeopardy of blowing out your account when you have a very, very low probability of success. Our whole business is built off of a probability model. Okay. Remember, the chart itself is a geometrical progression. Okay. It is made out of rectangles, triangles. Okay. And it moves before. Now, if you remember what we talked about in the past, universal price, all charts are the same. All patterns repeat themselves. So I look at a 1 minute chart in the S&P, we're actually in a downtrend on a 1 minute. And remember that no major trend can turn until it starts in the one. So if I look at the 1 minute, we're in a downtrend. If I go to the 5 minute, okay, we're kind of consolidating, trying to break to the downside. And if I go to the 15 minute, oh, wait a second, it's changed. I'm still consolidating, but I'm in an uptrend. If I go to an hourly chart, okay, I've got a solid uptrend. And of course, the 4 hours would be a solid uptrend. And of course, then that would take me to the daily, which is an uptrend. You want to go a little further, go out to and check out a weekly. Okay. Now on a weekly, interesting enough, and I want to show you this in the NASDAQ. In the NASDAQ, in a weekly chart, you're seeing what is known as a cup and handle, which is one of the most bullish patterns that there is. And this is a true cup and handle because it's building out of an uptrend, a cup, here's the handle, and here's the breakup. Okay. So again, these are things these are tools that you want to use to create better opportunities for yourself. If you continue to put yourself in jeopardy, then you're going to continue to keep yourself and prevent yourself from making real money going forward. So the idea is to find the best opportunities that you can. And sometimes the truth of the matter is there isn't opportunities. Sometimes you got to sit it up. Sometimes you got to watch. And that is one of the hardest things to do, is to learn how to observe the market, to watch the chart patterns as they develop. And again, I can say with a high degree of confidence that this is probably a pretty good sale, just in an option as a premium sale. Okay. Again, I don't think there's any money to be made trying to be short the market right now. I do think there's a little bit of money to be made being on the short side of premium. But again, I'm not always a big fan of only trading one side and only trading for limited risk and limited reward. I do like the opportunity to get paid off when it is right. And I do again recommend and think that maybe this is a better time to sit it out and take off, because again, you've got a short day today, tomorrow, there's gonna be very little volume. And then of course you're off on Monday and we get back to work on Tuesday, but don't expect Tuesday to be the end all be all back to business. But that week we'll get a pretty good idea what the action is going to be like. And if we can see an increase in volume, it'll open up opportunities and things for us to do. So in the meantime, I want to thank you all for being a part of the show. And I want to wish you all a happy new year, because this will be our last show of 2023. But thank you so much. And again, just be careful. Don't force the market. The market will be there tomorrow. Markets trade 241 days a year. So I would certainly sit back and wait and relax. And until next year, have a great year, everybody. Happy New Year. Thank you so much. And we will see you back here. And most of all, just be careful. Adios.